Hi traders and welcome to the Technical Analysis Market Watch on Friday the 1st of December. So we've seen a pretty turbulent sort of end to the week. It was a bit quiet at the start of the week with the US public holiday, of course, but it certainly ramped up towards the end. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that it's had a really good move actually from where we were talking about last week. You can see this is last week's candle hit the target zone that we wanted around that 66.20. It did actually blast past that, but quite often, as is the case, when you do get past a very strong resistance zone, you do get a bit of overreaction on the way back. And you can see that even in the last candle, a very, very big doji, we can see a very small open and close right here at the basically 66 cent flat, but very, very big wicks on either side. So it had, basically a 40 to 50 pip move on either side of the open and the close. So very, very big volatility inside. That's a big range actually for it to open and close at the same area, but it did push past the resistance quite strongly. So hopefully you're able to get into this trade because it was a pretty easy one to get into, and the target was obviously hit at the start of the week or sort of the middle of the week. So look, what it does from here is it's in the middle of no man's land, which is what the candle really indicates. You can see that we've got a little bit of support and resistance at around this level. The 66 cent mark is a little bit of an issue for it. You can see all of this support right through here, all of these bottoms, and resistance right through there. So not really surprising that it found itself here, but it has had an attempt at both ways and failed. So realistically, it is truly indicating exactly what Doji candle indicates, which is indecision. Either way, we're looking probably at a bit of a pullback now. I would think that probably down to the 20 moving average would be the logical scenario for a move down. I would think that if we see any sort of weakness or pattern starting to form on the way down with a series of lower highs and lower lows, I would be aiming for that particular moving average. That's probably around that sort of 65.50 by the time it gets there once the market starts to move. Of course, if it gets up above and closes above the 66.20 in the upside, then we could look for the previous high as the first target. Still not really interested in getting long on this one or short for any longer extended period of time. I'd be scalping it and just taking the smaller moves for now. But in reality, it has actually done a really good job, and I think it's hit all the zones that we needed it to. Hopefully you're able to get hold of that. But at the moment, right in the middle of an indecision zone. Over to the US dollar CAD, and this one has also played the game quite nicely. It did do what we needed it to. It broke through, came down, and obviously we hit around that 135.50 area. That's not a bad place for it to land. You can see that we've got previous support at that level, and it did find it there. It had also a bit of a reaction in terms of the wick action. We have had some, reasonable moves on a couple of these currencies in the last 24 hours, which is good. The 20 and the 50 moving average are bearing down on each other though, so it does look like it's about to cross on that, and we haven't had a cross for quite some time, obviously. Way back in August was the last cross, so that is a bit of a negative on it. But look, the good thing about this trade, we were talking about it last week, and if it broke that level at this area here, we know what we were looking for. And the easiest way, look, you go to the smaller time frames. If you want to get involved in trades like that, it can be a little bit difficult to trade on the daily candle. But if you're looking at the smaller time frames and actually trading the moves, it's what we talk about all the time. You can see this week's trading. We've been basically making a series of lower highs and lower lows all the way through. Touches of the 20 moving average, sell, 20 moving average, sell, 20 moving average, sell. Okay, you had 3 or 4 very, very solid opportunities to get in on that downtrend that yielded pretty good results on every single one. So hopefully you're able to catch hold of some of that, because that was a pretty pronounced move that we were talking about. Once it did break that zone, it was a relatively easy trade. All right, over to the US dollar yen. And this one's about to cross to the upside on the 1 hour. We'll go to the daily in a second, but as you can see, we've found a little bit of a support on the bottom here, and it has broken through, and we are about to get a 20-50 moving average cross on the 1 hour. So upward momentum on the smaller time frame is good on the US dollar yen. When we go to the bigger picture and have a look at the daily, you can see that in action, actually, we saw here last week. Okay, very good, trading really. We were right at the 20 moving average, right at the resistance zone, all the things we talk about. Okay, sell off, pull back to the 20 moving average. There's a very, very high probability that it's going to go down from that level the minute you get a small change of trend, and straight down to the level that we needed it to go to, of course, which was the 146.80. Similar in a sense of what you're looking for on a smaller time frame. You've only got to go to the smaller time frames and identify. Look at that. I mean, realistically, it came up, touched that 20 moving average, which is around this level here on the daily. Once it rolled over, down it came. 20 moving average, down it came. 20 moving average, down it came. 20 moving average, down it came again. You got 4 or 5 really, really good opportunities. Then we found the support here. We've got divergence as well, and we've had a bit of a launch off that level. So really good trading on the technicals from basically all of the currencies that we looked at so far. They've been very, very solid. So hopefully you're able to get a hold of that, because those trades were all relatively simple from last week's analysis. Over to the dollar index. Big reaction in the last 24 hours. Obviously, we can see that we've had a big move up. It broke through the very important support through here, and then we've basically rebounded. Look, obviously the euro is the one we're going to have a look at in a minute. That's the one we'd want to trade, but we have had a pretty big bounce. Look, it's fallen very, very sharply. Obviously, still in a very strong downtrend. The prevailing trend is obviously down here, and nothing has changed in that regard. But what we're looking for probably is a bit of a move up to the 20 moving average, and then we reassess. That level there is a reasonable level to aim for from a standpoint of going up. The 104 sort of 15 to 20 area, the 20 moving average is there. Again, smaller time frame moves up to that. You can see once we got that lightning bolt up, we were off. Came back, it touched it, and off we go. We'll move over to the euro, because that's obviously the one most people trade. And realistically, very, very similar in the sense that it hit the resistance, went slightly past it. Similar to the Aussie, that once it did go past it, the reaction on the rebound is obviously a little bit more aggressive than we would like, but it's okay because we took profit here, right? This is what we were aiming for, and we got that. So hopefully you're able to get that trade, which is good. And then this is why we don't get greedy. We take the good support where it is and the good resistance where it is, and then let the market play its game, and then we look for the next opportunity. Hopefully you were able to get out of that trade and got some good pips out of it. Again, though, the 20 moving average is probably the catch zone around that 108 sort of 50 area. It's reasonable support here. You can see we've got support right through this area here and a little bit of resistance over here. The 20 moving average is trying to catch up. So if we land there, we'd look for a smaller time frame change of trend. If we start to see a series of higher highs and higher lows on the smaller time frame, we'd start to aim for long opportunities back to the 109.50. But of course, if it breaks the 20 moving average on the daily and breaks this support zone, we'd be looking for something a little bit deeper at around that sort of 107.80 to 108 area. But really, it's still in an uptrend, right? Just like the dollar index is in a downtrend, and we're going to look for the least resistance in front of us. So if we do get that support at this zone, we'd be looking for longs primarily up to the 109.50 if we get a series of high highs and higher lows on a smaller time frame. All right, and then over to the S&P, of course. Funny week. We saw, it's basically been very, very flat. You can see here all of the candles. Like I said, the holiday period over at the start of the week didn't really help this, of course, or from Friday, Thanksgiving, and it sort of resonated through this week's trading. Very, very flat. Not much movement at all. You can see right through there. We had a big rejection, an attempted breakout that came back and basically closed at the same place it started, which was yesterday. And in today's candle, it tried to sell off a little bit, but it has ended up at the same place. Look, it's a nothing week. And really all we're doing is waiting for some sort of a breakout of this consolidation zone now. Either way, we'd be happy to trade it. I'm not really fussed which way it goes. If we get a close above that 4,600 zone on a daily candle, we're going to look for moves up. I would prefer to wait for the break and test it from above. So when it does break through and comes back and tests it from above, that would be the preferred trade for the long. But if you want to scalp, there are scalping opportunities up to the 4,600. But of course, if it looks like it's going to break down and the 45.20 gets taken out by a daily candle, the very first trade we'd be looking for is the 20 moving average, which is around that sort of 44.80 level. So really set your zones around it. Scalping between the highs and the lows of the previous week is probably the best way to play this one, and then wait for a daily confirmation close above that complete zone to pick the direction for next week. So wherever it is trading on Monday next week, If it is indeed above or below one of these key zones that we're looking at here, that's the direction we'd probably play out for the start of the week and just let it hit the next support or resistance. But if it's still in this little mini zone, just sort of keep the trades fairly short until one of those key highs or lows are broken. So I hope you've been able to get some good trades this week. We've seen some very good opportunities in the currencies. Hopefully you were able to take advantage of those. Hope you have a fantastic weekend, and I look forward to seeing you all next week.